This is a massive change. Looking not at the CPI, but at the actual cost of living in the country, it's very obvious that the inflation rate is not 7%. It's much higher than that, in that it costs more than 7% to live here than it did last year. Why is this not on the front page of every publication?
Well, because the government, Wall Street, the Federal Reserve has a vested interest in the public not understanding how bad inflation is. In fact, one of the ways the Fed's been able to justify creating more inflation is because they claimed we didn't have enough of it. But the only reason we didn't have enough of it is because they were relying on their own highly rigged CPI. You know, the CPI wasn't always this dishonest. When they compare our inflation rates to the inflation of the 1970s, we're not using the same CPI that we used then. The annualized rate of inflation so far, according to the CPI for 2021, is 7.3%. If you annualize the first 11 months, that's the worst rate since 1982. But if we were using the same CPI as we used in 1982, the rate would be closer to 15%, which means it's the worst year in inflation in U.S. history, because the highest one year was 1980 when it was 13.5%, and this year it's more than that.
So I guess I don't understand why no one's being punished for this crime. I see people destroyed, literally destroyed, for voting for the wrong person or hitting on the wrong person at a party or supporting their brother over text message or whatever. The people who destroyed the U.S. dollar seem to be getting away with it. How is that?
Yeah, well, they just renominated Powell to a second term, as if he did such a great job on his first term. It's a complete disaster. Of course, they might have replaced him with somebody even worse. But this is the only way the government can finance all the spending. You have the Democrats now promising all sorts of stuff for nothing. We're going to get free preschool. Everyone's going to get paid family and medical leave, and no one's going to have to pay for it. Nobody's taxes are going up. We're paying for it through inflation, because the money to pay for all this government is being printed into existence, and then it's spent into circulation. And as it's spent into circulation, it's driving up prices. And when Jim Cramer was talking about all the money we're spending, yeah, the problem is we're not earning it, we're printing it, and then prices are going up. Our productivity is collapsing. We just got the worst productivity numbers in 62 years in this country. Our trade deficits are exploding. The economy is imploding. It is a mess. We just can't see it because we're blinded by all the inflation.
Right. Really quick, how long till the investors have lost faith in the U.S. dollar? That's why they're running to crypto. How long till the rest of the world loses enough faith that the U.S. dollar is no longer the world's reserve currency?
Well, people still have confidence in the dollar and the Federal Reserve. I don't know why they've gotten so many things wrong. You know, I think the people that are running to crypto are unfortunately running in the wrong direction. They're probably jumping from the frying pan into the fire. But eventually, the world is going to leave the U.S. dollar. The dollar is going to collapse. Money is going to flow into other currencies. It's going to flow into real money, gold and silver. It's going to go into real assets, stocks, real estate, mostly outside the United States, because we're going to be the epicenter of a coming currency crisis and sovereign debt crisis that's going to make the financial crisis of 2008 look like a Sunday school picnic. The inflation pipeline is pretty full. In fact, if you look at the PPI numbers that came out today, in the first 10 months of the year, producer prices are up 8.3%. Annualize that for the full year, and that's 10% increase, which is quite a bit larger, I think. Consumer prices are up maybe about 6% during the same time period. So that means companies are absorbing a lot of the price increases, and I think they've been reluctant to pass them on because they've been hoping that the Fed was right and that the inflation is transitory. But I think as they realize that the Fed was wrong and that inflation is here to stay, not only are they going to be passing on the rate or the price increases next year, but they're going to pass on this year's increases that they have been holding off on. So I think we're going to get a double barrel in 2022, which means that consumer prices are going to move up a lot more next year than they did this year. Well, first of all, they're still doing quantitative easing, even if they're doing slightly less of it. And of course, this is just temporary. They're going to back up the truck and do even more QE because they just passed the $1.2 trillion infrastructure bill. You've got another one that's even larger, Build Back Better, whatever they're calling it. That one is going to pass. So where's all the money going to come from to pay for all this government spending? They're not getting it from higher taxes, so they're going to get it all from the Fed. And the Fed is going to have to expand its asset purchase program to buy up all these bonds that are going to be sold to finance all this spending.
And the White House, it makes some interesting points about what the administration is doing here, because the White House has made meager attempts to rein in the rising costs for Americans. And one of the big aspects here has been rising fuel costs. So they've even called on OPEC to increase oil output to stabilize rising gas prices in the U.S. But on the other hand, their message tends to be that the economy recovered too fast, is just doing too well. And that's why we're having all of this crazy inflation. What do you make of that comment?
Yeah, first of all, they want OPEC to produce more, but they want domestic oil and gas companies to produce less. We need to produce our own oil, not beg the OPEC nations to produce more. But you're absolutely right on the whole concept of inflation, and the idea that it's somehow the price we pay for prosperity. This is nonsense. I mean, governments have been trying to rationalize and blame the public for inflation, for decades. It's not about the economy being too strong. It's actually about the economy being too weak. And because the economy is so weak, we're printing all this money. And that is the source of the problem. We're producing money, not stuff. And so the price of the stuff is going up. Meanwhile, we are importing record amounts of stuff. We have never imported more products than we're importing right now. But despite this surge in imports, prices are still going up because the economy is so weak that we can't produce enough even to fill that gap with record imports.
Peter, I always like to think of myself as a solutions-oriented person, and we tend to talk about all the problems and why it's getting worse. But at this point, is there any solution to these problems when we're this deep into it?
Well, there are no politically acceptable solutions. The solution is to stop the presses. The Fed has to go cold turkey on QE, not just try to taper it. In fact, we need to reverse the process, go back to quantitative tightening. The Fed needs to shrink its balance sheet, withdraw money from circulation, allow interest rates to rise right now, not hold them at zero. And of course, that means the government has to start slashing spending. Not only can't we have the infrastructure bill or the Build Back Better bill, we need to start getting rid of spending that's already happening. The government is spending too much money, and the stock market's going to have to come down. The real estate market's going to have to come down. A lot of bubbles are going to have to deflate if we're going to address the inflation problem. But unfortunately, none of that's going to happen, and so the inflation problem is going to get much, much worse. And that means the average American has a huge problem that he's going to have to live with and potentially deal with if they can.